This is our weekly market update where we start in the US, across to Europe and Asia, and then in Australia, covering commodities and crypto along the way. We got another major dose of uncertainty this week with doubts about Fed rate cuts, Trump's tariff U-turns reacting to US affordability issues, rising doubts about the sustainability of the AI trade, which of course has been supporting the markets, such that US stock valuations are higher than ever, and more confusion about US economic data despite the end of the government shutdown. Actually, Wall Street had its biggest one-day decline in a month on Thursday, and below the surface, data suggests more liquidity concerns in leverage markets, something which it appears was the subject of a private meeting between business royalty and Trump this week, and as data also showed continued growth in the so-called hedge funds. Blue chip markets from Tokyo to Paris closed sharply lower, while fresh concerns about Britain's upcoming budget added to pain in UK markets. In the meantime, Bitcoin continues to drop in bear territory, though volatility there is just par for the course. As a result, MSCI's global equities gauge lost ground on Friday, though it was up for the week, while Wall Street had a muted end to the week with the S&P 500 flat and up for the week, while the Nasdaq was down for the week, though up on the day. The Dow fell 0.65%, but showed a 0.3% gain for the week. And earlier, the Pan-European Stock 600 index slipped 1% on Friday, though again it was up for the week. Before Wall Street opened, MSCI's broadest gauge of Asian shares outside of Japan closed down 1.5%. The Australian share market also tumbled to a 4-month low on Friday as investors erased $37 billion in value on concerns that interest rates in both the US and Australia were not coming down anytime soon. And over the week, it fell 1.5%. Brent rose 1.2% on the week, and WTI posted a weekly gain of around 0.6%. Gold futures were down 2.39% on Friday to $4,084, and the VIX, the volatility index, surged as high as 23.03 before falling back later. US Treasury yield climbed after hawkish Federal Reserve officials trounced hopes for a December interest rate cut, citing inflation worries and signs of relative stability in the labour market after 2 US rate cuts this year. A growing number of Fed policymakers signalled reticence in further easing. On Friday morning, Kansas City Federal Reserve President Jeffrey Schmidt pointed to concerns that too hot inflation goes well beyond the narrow effects of tariffs alone,